Hello, my name is Kevin Berry, and today I'll be doing a presentation on a historical review highlighting the need to transition from venture capital to institutional investment in the space industry. These renderings show the potential future projects in space we may yet build. To build these projects, humanity will need to move past speculative investing in space. This presentation will contextualize current issues in space, establish definitions used to address 5 separate case studies, and then conclude on the best ways that we can move forward based on those results. To chart a path forward, this presentation focuses on historical great surges in development and finds strong correlation with major infrastructure projects supported by finance and institutions leading to golden ages like the one we're seeking in space. This model, developed by Carlota Perez, is the investment cycle of great surges of development. The frenzy stage during the installation period has the highest growth rate and is all about investing in the speculative value in growing companies. This often creates gilded ages and leads to a market crash. After a transition period, golden ages are made during the deployment after institutional recomposition, where real production rather than speculation drives financing and development. This model is an important backdrop to all the cases that we will study, including the current space sector. The space sector is also experiencing exponential increase in investment, mostly in the last decade, where venture capital investment rose from $200 million to $4 billion in the last 5 years and represented 71% of investment in space startups during 2019. Concerningly, most of the space startups that are being invested in are collecting money, have no revenues yet, let alone profits. Venture capital is a new form of speculative private equity investment that was developed in the 1960s and is distinct because it acts as a financial intermediary, like a bank, between investment capital and portfolio companies. They take an active role in the companies they invest in and only invest in the internal growth of those companies. And most critically, they seek to maximize their financial returns from exiting with an initial public offering or sale. This graph shows the intensity of venture capital market activity leading to the 2000 dot-com bubble and its subsequent crash. Right now, we can see that current investment in space represents about 1/7 of all venture capital investing in 2019. Often conflated with angel investing, angels are distinct in that they only use their own capital rather than other people's money as venture capital does. Infrastructure is a new term, but a very old concept going back almost 11,000 years as public works. It is defined by its immobility, which in space can refer to stable orbits or configurations rather than not moving. The longevity, where these projects can take a very long time and last for decades, if not hundreds of years. They are capital goods that are not meant to be assets, but provide a service. And even on the largest of scales, they appear lumpy in their effect on the overall economy, because 90% of a bridge is functionally providing 0% of its benefits. And lastly, the public service that infrastructure provides, usually in the form of reduced transaction costs, is their primary value. Infrastructure is old, and it is the foundation of all great civilizations. The gist is that good kings built good cities, irrigation canals, and roads for the benefit of their people, whilst bad ones waged unnecessary wars and built large palaces for themselves. And Rome was no exception to this rule. Roman roads established a massive network connecting their empire, and most of the value derived from these roads, originally built for military movement and tax collection, was the spread of Roman culture, particularly ergotism, the concept of social position derived from building public works projects. These commodities were secondary benefits and could not be directly told. The Middle Ages also is a cautionary tale to the instability of this without all three pillars. The Catholic Church functionally froze financial liquidity by ending the use of interest that led to almost 1,000 years without significant economic prosperity or infrastructure growth, and led to a rapid decline of the very intense Roman infrastructure already built. Without these strong institutional and financial supports, it was subject to collapse. This graph representing the investment cycle demonstrates the fervor and excitement over new technology and development that leads to speculative growth, and in short, too many companies producing brochures and not enough producing widgets. We can see during the 5 great surges to development how this produced the canal mania, the rail mania, the London-funded stock market crash, the 1929 stock market crash in the US, and the recent dot-com bubble. After a rough transition period, the deployment golden ages were examples of how coming out from the other side and realizing the benefits of infrastructure can be so helpful to society as a whole. The Panama Canal was a landmark achievement that took over 100 years to complete and was done so in 4 distinct phases. The French efforts, led by Ferdinand Lesseps, utilizing his notoriety for completing the modern Suez Canal, raised a huge amount of speculative investment from the French people. And after 17 years of overpromising and underdelivering, the project was forced into bankruptcy that put all of France into a depression. Theodore Roosevelt took this opportunity to acquire it and to build a city and a railroad to support the subsequent construction of the canal under the Army Corps of Engineers. Despite having far less funding than the previous French effort, the Army Corps of Engineers was successful because they focused on solving manageable problems and not visionary ideals and promising huge returns. Antiquity showed that civilizations undertook and supporting massive public works projects created golden ages. To create one in space, we're going to need to follow that pattern. The line that all roads lead to Rome applies to more than just soldiers and taxes. Cultural influence and the rise of its economy was facilitated by its roads. Similarly, GPS was originally built for military, but it has changed how our world works today. Starlink's constellation to provide global internet will connect more people than ever before. The Middle Ages shows us the threat of unfunded infrastructure, and the great infrastructure fails quickly without support from institutions and finance. If and when the space sector crashes, we need to build resiliency to guard against this threat and that of space debris. The great surges of the last few centuries show us the importance of understanding the financial cycle and recognizing the threat of over-leveraging speculative capital, like venture capital, into such speculative returns alone. The Panama Canal demonstrated the great projects humanity can construct and the need for adequate support systems and structures to achieve those desired goals. Space will need similar forward bases and feasible and effective ways to move resources to reach our goals. A golden age in space is an attainable dream, but speculative financing alone can only provide a seed. We need all 3 legs of the stool to build a golden age in space for all mankind. Thank you.